Have you ever ran into that one guy talking about how he almost bought Bitcoin at $300? And today, everyone's talking about grabbing some ASICs, slapping them in their garage, and booming up some Bitcoin for some passive income. Not even thinking about electrical costs. It's kind of funny because Riot Platforms does just that, but they think very heavily about electrical costs. And they're not just mining Bitcoin, to be clear. They're playing a crypto game, an energy game, and an infrastructure of data centers game. This is the real reason that Riot Platforms might be one of the most misunderstood plays in the market. Let's start with the business model everyone thinks they understand about Riot. So, Riot mines Bitcoin. They run massive facilities in Texas and Kentucky. They operate about 5% of the total network hash rate, and they have highly efficient machines that validate the transaction and earn block rewards. In June alone of 2025, they mined 450 Bitcoin, averaging about 15 Bitcoin per day, and made a revenue of $47 million. They also sold 397 of those Bitcoin and made about $4.17 million in net proceeds for operations. Simple? Maybe. But here's the twist. That's not where the real money is made. This is for operations. The real money is made here. Here's Riot's secret weapon, this light blue known as Texas, and ERCOT interconnections, otherwise known as the Electrical Reliability Council of Texas, even though most Texans probably would call them that. So, they are plugged into the Texas energy grid, and they have mastered something called power arbitrage. How this works is electrical prices fluctuate throughout the day. When demand spikes, like during a heat wave, prices soar. So Riot shuts down its mining and all of its rigs for a period of time and sells the unused electricity back to the grid. In June alone, they earned $5.6 million in power credits just for turning off their lights at the right time. That's power arbitrage. You buy low and you sell high, but with electricity. And because Riot locks in this ultra cheap energy deal, their all-in power cost is just 3.4 cents per kilowatt hour. That's insanely low. Some people pay 3 times that, and that's considered a good price. And if that gives them a massive edge over the miners that nobody else can even get to, because no one has Texas's electrical system, which is mainly funded off of natural gas facilities. But that's not just saving money, they're building infrastructure. Riot owns ESS Metron. It's an electrical engineering firm that designs custom gears for data centers. That means faster build-outs, lower costs, and another revenue stream most miners don't even touch. They are vertically integrated, and they're not stopping at Bitcoin. Riot's Corsicana facility has 600 megawatts of unused capacity, and they're eyeing an AI high-performance computing as the next frontier. This isn't just a mining company, it's a digital energy company in disguise. Alright, now let's get to my favorite part. Let's talk numbers and zoom out just a little bit so we can see how they were doing in 2024. In 2024, Riot pulled in $376 million in revenue and booked over $109 in net income. The adjusted EBITDA was $463 million, and the EBITDA, non-adjusted, was $304.4 million. They're sitting on over 19,000 Bitcoin, worth more than $2 billion in today's prices, and they're not afraid to raise capital. In late 2024, they issued over $579 million in convertible notes to buy more Bitcoin and expand operations. This isn't a company scraping by on hype. It's vertically integrated and energy savvy. It's a Bitcoin mining machine. Now, let's look forward. But before we jump right into it, if you're into these kinds of number crunching predictions, which, fair warning, they're a little tricky to get spot on, go ahead and hit that like button, subscribe, and drop a comment. It really helps me out and lets me know you want more of this. So, looking back to Q2 of 2025, Riot mined about 1,427 Bitcoin. That's April, May, and June combined, with June itself being about 450 Bitcoin mined. Looking forward to Q3, I'm going to be calculating these trends off of a month-over-month basis and seasonal changes. So for July, I'm expecting a 28% jump over June. So that's roughly 575 Bitcoin mined. In August, I'm going to be taking a bit of a step back and looking for about a 15% drop to 490 Bitcoin in August. Then September, I'm thinking it's going to bounce back a bit. I'm estimating about 7%, and we're going to have it at 527 Bitcoin mined for September. All said and done, that puts Riot on track for about 1,600 total Bitcoin mined for Q3. That's a nice step up from Q2, even with the usual summer ups and downs. That kind of steady growth and resilience is what makes Riot such an incredible and exciting story, no matter what Bitcoin does. Alright guys, I do think that's it. This took a very long time. Again, please like, subscribe, and I'll catch you guys on the next one.